Hey everyone, Joe here and welcome back to the channel. Today we've got a crucial topic on deck, the Canadian Pension Plan, commonly known as CPP, and its changes for 2024. Now, I know pensions might not sound like the most exciting topic, but there's some pretty major changes and understanding them is pretty darn essential for every working Canadian. Because we're not just talking about nickels and dimes here, these changes are set to impact your financial future significantly. In this video, we'll delve into the critical aspects of the 2024 CPP changes. We're going to cover everything from the fundamentals of CPP to the new tier system to how these shifts might affect your paycheck. So all that and nothing else coming up. All right, first up, let's dive into the basics of the Canadian Pension Plan, aka the CPP. A pretty important question to answer is what the heck is CPP and why does it get deducted from your paycheck? The CPP is a mandatory pension plan for almost all workers in Canada. If you're over 18, working in Canada outside of Quebec, and earning more than $3,500 in a year, part of your paycheck goes into the CPP. However, it's not just a deduction. It ends up making up part of your future financial safety net. And it's a joint effort between you and your employer. So here's how it works. A portion of your salary is contributed to the CPP, and your employer matches that contribution. So for every dollar that you put into the CPP, your employer is adding another dollar. But to be clear, the CPP isn't a tax. It's a contribution towards your own retirement fund. So think of it as a long-term savings plan that the government manages for you. The idea is that when you retire, you'll receive a pension based on how much you and your employer have contributed over the years. So while it might sting a little to see those deductions now, remember, this is for your financial security down the road. It's ensuring that you have a stable income when you decide to hang up your work boots or your extensive collection of name tags and hairnets. That's the CPP in a nutshell, a mandatory employer-matched retirement plan. Now let's move on to the new stuff, the changes coming in 2024. But first, a quick request. If you find our content helpful, we would greatly appreciate if you subscribe to the channel. We want to help as many people as possible, and we've set a subscriber goal of 100,000 subs. I guess we kind of want that plaque to hang in the office as well. I know we're just getting to 15,000 now, but we're determined. All right, thank you for that, and back to the CPP changes. There are some pretty significant changes coming about for the Canadian Pension Plan in 2024. The most notable being the introduction of a new tier system. This is a big deal because it changes how much you'll contribute based on your earnings. So let's break down what this means. Starting in 2024, there will be two tiers of contributions. The first tier is what you're used to, contributions based on your income up to a certain limit. But the second tier is where things get interesting. It introduces additional contributions for those earning above a certain threshold. Here are the specifics. The first tier, or the year's maximum pensionable earnings, or YMPE, will increase to $68,500, which is up from $66,600 in 2023. What this means is that you'll contribute to the CPP on earnings up to this new higher limit. Now, for the second tier, known as the year's additional maximum pensionable earnings, or YAMPE, the limit is now set at $73,200. Earnings between $68,500 and $73,200 will be subject to an additional CPP contribution at a rate of 4%. Calculating your CPP contributions can be a bit tricky, but it's important to understand. The first $3,500 that you earn are exempt from CPP, meaning no CPP is calculated on your earnings up to that amount. For your earnings above $3,500 and up to $68,500, you and your employer will each contribute 5.95% in 2024. For earnings between $68,500 and $73,200, the contribution rate is an additional 4% from both you and your employer. These changes will impact Canadians differently based on their income levels. For those earning under the YMPE, meaning that you earn less than $68,500, the impact will be minimal. However, for those earning more than the YMPE, you'll notice a pretty pronounced increase to your CPP contribution this year. Let's start with an easy example, an employee earning $60,000. Now, to start with, the basic exemption of $3,500, so no CPP is calculated on the first $3,500 of income. So then the remaining amount of $56,500 is multiplied by the CPP contribution rate of 5.95% in both 2023 and 2024. So for both years, then we just get a total of CPP contributions of under $3,362. No change in CPP contributions for the employee earning $60,000 a year. Next, let's look at an employee earning $68,000 in 2023. This person would have contributed a total of $3,754, which was the maximum for that year. If they earn the same amount in 2024, their CPP contribution would increase only moderately to just under $3,838, which is an increase of about $84. For the third example, we'll look at an employee who would fall into the second tier of CPP, which is anyone earning more than $68,500. If our second employee earns $75,000 in 2023, they would still only contribute $3,754, which was the maximum for that year. However, if they earn $75,000 in 2024, their total contribution would increase to $4,055 due to the increased YMPE and the addition of the second tier or YAMPE. So if you earn an income above $73,000, you'll pay about $300 more in CPP contributions this year compared to 2023. For the self-employed, these changes are particularly significant since self-employed individuals contribute both the employee and the employer portions. The increase of the contribution rates means a bigger chunk of their income goes towards CPP. Their maximum contribution goes from around $7,500 in 2023 to just over $8,100 in 2024. If you're self-employed, that's a big chunk of your earnings that doesn't stay with you at the end of the year. The 2024 changes to the CPP are designed to bolster the pension plan for future generations. While it means higher contributions now, the goal is to ensure a more secure retirement for all Canadians. These CPP changes underscore the importance of financial literacy, particularly for the self-employed and entrepreneurs. Understanding these nuances can make a difference in your financial planning. Keep an eye out on this channel for our YouTube live workshops that we hold twice per month. We discuss timely financial topics for small business owners, self-employed individuals, and general tax-paying Canadians. We also offer online courses where we cover topics from bookkeeping and tax filing to launching a successful business. So check out the link in the description below for more details. All right, that does it for this video on 2024 CPP changes for Canadians. Thank you for watching, and we'll see you in the next video. Cheers.